Hi traders, welcome back to my 200k prop challenge series with FundedNext. We continue our journey after Ten's first week. On the previous video, we have seen how a small dump got me extremely close to my stop loss in the platinum trade. It was the worst start I could possibly imagine to this challenge. In this week, however, I kept that precious metals dump in my mind when I was placing my second trade. Here's how it went in a nutshell. Fool me once, shame on you. Fool me twice, shame on me. But I didn't stop there. Last week when I said I raised the stakes and took a 3% risk, well, this week I took yet another calculated risk and opened a correlated trade. So I was long on platinum and gold at the same time. That's 6% of risk moving in the same direction. If this was a poker table, I would be going all in, but it is not. This was the result of a detailed analysis and looking at the trade from different perspectives, and by using quite a number of tools and indicators. We will go through all of that in a minute. But as always, first things first. Hi, I'm Bernd, a seasoned full-time trader with an impressive decade-long track record. I handle $2.4 million in props on capital and run a licensed investment consultancy in the bustling city of Dubai. This is the first time I'm documenting everything I do on a prop challenge. Come join me on this extraordinary journey. I always notice in the second week of the challenge, things start taking shape. In this video, I'll update you on my open position from week 1, the platinum trade. I'll also dive deep into my analysis for the second and third trades that I took on gold and US 30 and explain the logic behind each one of them. And I'll walk you through my favorite OTC indicators as well. I could go as far as saying through the entire series, this week was the most important one. I think you'll know why by the end of this video. Now, let's see how that second week unfolds. Ladies and gentlemen, welcome back to our FundedNext YouTube challenge documentary. Today is the start of week 2, day 6, and it's the 22nd of August. It's Tuesday early morning. So just to give you some heads up what I'm going to do this week, I'm always going to review the previous day, early morning of the next day, so I can also analyze the completed yesterday's candle, daily candle if necessary, and I can give you a better review of the previous day. I think it just makes more sense to do it always one day after early morning. Now, what happened on Monday, day 6? I entered a new position on gold, XAUUSD. Now, after being 1 week in platinum, I entered another trade, which is gold. And also 3% risk exposure, and it's also a swing trade, and it's a long position, a buy position. Now, you see it up here, it's running already a little bit in positive. It's kind of balancing out the platinum position. We are still a little bit negative due to the swap accumulated in platinum. Let me go through my analysis process of gold, why I entered the trade. We will not cover everything today, just step by step. We have the whole week if nothing happens, right? If I'm not getting stopped out. But let me show you my step 1 of the analysis process, which I go through our proprietary fundamental indicators here. First of all, the valuation tool. All right, so what I want you to focus on is, let me remove this quickly. I don't want to show gold itself. I only want to show the valuation versus the dollar. Now, this is basically gold versus the dollar. And we want to enter gold once gold is undervalued versus the dollar. And let's do quickly some back testing. And then I want to show you how gold behaved once we are undervalued versus the dollar. You see it down here. Let's go back in history. In July 2020, here we were undervalued, and look what happened. We had a downtrend in gold. You see here on a daily chart, a downtrend. We made lower lows and lower highs, but
again, we had the impulses here, but we had the correction move here because we were undervalued. Similar to here, look, we were undervalued here, down here. So if we are close to the green horizontal line, which means undervalued, if we are close to that red horizontal line, we're overvalued versus $. Now we were undervalued here and we started basically the bottom of gold here, right? And we started that huge rally. Look at this here, we were undervalued and we started that rally as well. Here we were undervalued for a little bit longer. And again, in this downtrend, we got this nice move to the upside. And now we are very close, not yet fully undervalued, but close to undervalued, all right? So I entered this trade as well. So this is our valuation tool, very powerful here, gold versus the $. So this is just one of our 3 indicators that I want you to understand why I am basically entering a trade, and the other ones I'll go through the next few days. But that's the valuation tool. All right, that's it for today, and I'll catch up with you tomorrow. All right, ladies and gentlemen, welcome back to our FundedNext YouTube challenge documentary. We are in week 2. It's day 7 today on the 23rd of August. Now, what happened yesterday? First of all, you see we are now overall with both positions. We are pretty much in profit. Not much yet, not even close to 2%, but it's still better than last week. So we are moving definitely so far into the right direction. Now on platinum, we are moving higher. We moved higher. We created a nice daily reversal pattern. Classical bottom reversal, drop base rally followed by rally base rally, a level on top of level. That's great. And on the gold position, nothing decisive yet, so we definitely need a daily decisive candle here just to create some obstacle, because otherwise if we just continue to stair step higher, stair stepping is never good. Why? Because stair stepping is retail behavior, and we need some institutional behavior. Institutional behavior would be something explosive, something decisive, something here. So if we get something decisive at some point of time, I hope very soon this week, we also create a new barrier, a new demand zone where price cannot fall through. Okay, this is basically very important that we see something decisive in the next few days. So everything all right. Now let me go quickly again to my analysis charts. And yesterday we talked about gold, that gold is undervalued, close to undervalued to the US dollar, which is important to go long. This is one of the rules, right? Another rule is if we look at our smart money index, and this is really interesting. Now, we have the green horizontal line here and the red horizontal line here. Now, let me remove the orange line because the orange is not important. When we are close to that green horizontal line, one of the two parties here, the blue line, represents the smart money, the red line represents the retail traders, all right? So if the blue line is all the way up here, then the blue line represents the smart money. They are bullish, and obviously we want to follow the smart money. And if the red line is down here, so that represents the retail traders, they are bearish. So we want obviously the retailers to be bearish because we want to trade on the other side, right? We want to trade against the retailers. If the retailers who are mostly wrong, if they are bearish, we want to be bullish, and if they are bullish, we want to be bearish. But we want to trade with the smart money. So if they are bullish, we want to be bullish as well, and not the opposite, right? Because they most of the time win. So if we look back in recent history, we can clearly see that, look at this here, the smart money was bullish. This is the weekly chart, by the way. The smart money was bullish and the retailers were bearish, and look what happened. This was the bottom here and we rallied like crazy. Here basically, you see also here, once the smart money is getting bullish, we get at least, even in a sideways trending environment, we are getting some green candles up. And we are not holding this forever, right? It's a swing trade, so we just need 1 or 2 weekly green candles here. Here as well, you see here nicely as well. Here again, here the retailers were actually right, so they're not always wrong, but most of the times. Here they were wrong again, here they were wrong again, and then we started the rally. And here you see the smart money is bullish as well, and we are getting that rally. Here it takes a little bit longer for them to basically cause this change in direction, but eventually it happens as well. Right, nothing is 100%, this is really important. Now, here now, status quo, as we speak today, they are getting very bullish again, and the retailers are close to very bearish. The perfect scenario here, or close to the perfect scenario, because the retailers are not fully bearish yet, but there you see how they are closely getting bearish. So perfect scenario we had here, nice rally. Here, nice rally, and here as well, and here we got this monster rally. We don't need a monster rally, right? It's just a challenge. We don't want to stay in this trade forever. But we want to have some green candles just up here, right? So smart money index, also very important, especially trading commodities here, gold, silver, etc. And for me, here you see already valuation perfect, the smart money index perfect. So bias-wise, I'm really bullish on gold. All right, ladies and gentlemen, welcome back to our FundedNext YouTube challenge documentary. We are still in week 2, and today we review Wednesday, day 8. Today on Thursday, the 24th of August. Now, you see it based on the unrealized P&L. We are up almost 10K, so 6K more to go. But this is all unrealized. So unrealized doesn't mean anything. This can change by the minute. But it's good to see that we are moving on both trades, platinum and on gold. So on this challenge, on this FundedNext challenge, I only, quote unquote, only have to achieve 8%, not 10%, like on most of the other challenges. So 8% is 16K on that 200K account. So 10K, right? We can do all the easy math. 6K more to go, but it's unrealized. I didn't book it yet because I believe, quote unquote, believe, based on my analysis, obviously it's all objective, we still have some shoes in it on platinum and on gold. But that's definitely a good start into week 2 of our challenge here. So let's go to the charts here, to my charts here, TradeStation charts, because they're really for analysis purpose only, because our indicators, right, they run on TradeStation. So our fundamental indicators, we discussed yesterday the smart money index, and the day before we discussed the Campus valuation tool, right? Both looking very strong on gold. And the third one, now let me open the third one here, which is our forecasting tool, our Campus algo forecasting tool, which can predict the future. So this is future price prediction, not necessarily price, but the movement of price, right? Because I can stretch this up and down, so it doesn't predict the price points, but more like the time when we can see highs or lows being in place on a particular market. So you see also here, our tool predicted that move to the upside. So we still anticipate a move higher here. So we going to, on that tool, you see here we are stalling, but this, once we are stalling, this is nothing really important. But it is important that we might stall, that we might hit a top around after the first week of September, somewhere in here, right? And then we can anticipate a drop. But until then, you see we should still go higher. So this is really important here, right? So what you can see is that all three fundamental tools that we have in place, the Campus Valuation, Campus Algo Forecast, and our Smart Money Index, they're all screaming that price is going to go up. And that's why I was biased so bullish on gold, right? And in the next few days, we go through the technicals as well, right? This is just, hey, I'm getting biased on a particular market, bullish, bearish, or neutral. Here, 3 out of 3 indicators, they screamed bullish, so I went bullish and I timed the market. All right. Now we're going to discuss the timing part. This is step 2 of my analysis process in the next few days as well. All right. Until then, fingers crossed that price is moving in our favor. And as I said, I think we still have some juice in it as well on these two markets, gold and platinum. Until next time, bye-bye. All right, ladies and gentlemen, welcome back to our FundedNext YouTube challenge documentary. We are still in week 2 and we analyze day 9. So week 2 is slowly coming to an end. One more day to go, but let's review Thursday first, today on the 25th of August. Now, you see it based on the P&L, not much really happened. We are halfway through the challenge, unrealized obviously, so this can fluctuate up and down. So, which means yesterday not much happened. There was a little bit of volatility because of the Fed Chair Powell speaking today again. So that's why you see it also here. One trade is placed here on the US 30 on this one here. Now here on that daily demands on drop base rally. Once I'm filled, we're gonna go through my train of thought, through my rules, why I placed this trade and why I also think this is a really, really good trade here on the US 30. Besides that, as I said, Platinum is not doing a lot, trying to push higher. We are not yet, we'll go through the fundamentals as well in a second. We need a little bit more of a push here. This is a little bit too stair-stepping for me. I'm not a fan of this move overall, but on the other side, we created some nice obstacles, so demand zones on the way up, which is protection for our position. Now, on gold, similar here, we are basing right now, so obviously I hope, quote-unquote, that this is going to turn out to be a rally. All right. In terms of now the fundamentals, let's quickly go through them. On platinum, there are two things I want to point out on platinum, which is interesting. You see valuation, our valuation tool, again purple, this is the US dollar. So we have to get out either once price hits the target, ideally, right? Or once price gets overvalued versus the dollar, because this is when we always, like you see that, always get a reversal, or we can basically also get into a short position, but this is very hypothetical right now. What we see is right now is around the mean, so it's not to worry yet that this move to the upside is over just yet, but it means that we have to be on the lookout, because once we get a sharp rally up, this could easily go, and the dollar is weak, then this would easily be overvalued. But I'm just, right, this is one of the tools that I use also to trail or to know when to exit the market. Really important now here on platinum. Also, you see here on that lower time frame chart, for me 120 minutes 2-hour chart, you see we are moving higher in this kind of channel formation. So a break of this channel, technically speaking, would be also not ideal, obviously, but we have a lot of demand on the way down. So this is acts as protection. I would like to go through, but I'll do this tomorrow, why gold is such a good, well, we went through the fundamentals, but not really through the technical, through my step 2 of the process. We are going to go through step 2, why this is such a good trade, technically speaking as well. We're going to go through tomorrow. In the meantime, this P&L is moving up and down, so fingers crossed that today we're going to get a nice push to the upside. All right, guys, talk to you tomorrow. All right, welcome back to our FundedNext YouTube challenge documentary. Today we review the last day of week 2, day 10, and it's the 27th of August. Now a lot of stuff happened on Friday. You see here I closed my 2 positions on gold and platinum respectively. We booked a little bit more than 10K, and now if I go to, this is the history, now I go to trade. So we have one more trade running that I entered on Friday, which is the US 30, the Dow Jones, and we talked about this, I think, on Thursday, that I have this trade placed and I expect this to hit today or tomorrow, and this is what happened. And look at this perfect, this is a 4-hour chart, look at this perfect entry here. It was a set and forget trade, but look how nice this quote-unquote sniper entry was, right? Now, I have placed a target here, so why did I close gold and platinum? Because now we have to do this a little bit strategically. We are up close 10K and our equity is at 14K. We need 2K more to hit the target that we need to hit, the 16K, the 8%. And you see the target for the Dow Jones is just right here. So price has to come a little bit higher on Monday on the Dow Jones. So that's why I booked the profit on gold and platinum. And we just need this to go a little bit higher on Monday. And then we hit the overall target, the 16K, the 8%. And that's why I closed gold and platinum. And I have just the US 30 running. I was actually expecting already maybe Friday evening because it was coming close to the target, but it didn't. So now hopefully knock on wood that this will happen on Monday or Tuesday, that we're gonna go up here to hit the target. All right, but everything can happen. I'm just saying, fingers crossed that this is going to happen on Monday. And why did I enter the US 30, the Dow Jones, and look at this nice entry again on a daily, this drop base rally and entry here, stop loss here, perfect entry, target here, because of our fundamentals, our valuation tool. So for the equity indices, the valuation tool is the most important tool for me. And every time we are undervalued versus the treasury bonds, this is a big buy signal. And if we are undervalued versus all 3 assets, treasury bonds, gold, and dollar, then this is like almost a self-fulfilling prophecy, a big probability that price will go higher. Look in the recent history, what happened once we were, and this doesn't happen so many times, by the way. Look at this. So here, purple is the dollar, yellow is gold, blue are the treasury bonds. Once we are undervalued versus all 3 assets, look what happened here. Look what happened. Here, big daily rallies, these are the bottoms. These are basically the bottoms, as you can see. Here, undervaluation versus all 3 markets, assets. Got this big rally here. And now, look at this again. Here, undervalued versus all of these 3 assets. This is usually, I would say, the fundamentals. These are not the timing tools. These are setup tools. That's why it's a step 1 to get biased, right? Bullish, bearish, or neutral. But here in this case, once we are undervalued versus all 3 assets, it can be almost used as a timing tool, because it's just like price will eventually go higher. But we have also, of course, here to time the market, this nice demand zone. So pretty simple trade to get in. So we expect price to go a little bit higher, and hopefully by next week we hit our 8% target. Fingers crossed.
Wow, what an incredible week 2 it has been. If I had to sum it up in one sentence, here it is. Quality over quantity, because choosing high quality trade setups that align perfectly with your rules is the absolute game changer. Trust me, it cannot be emphasized enough. And let me tell you, it was a sight to behold how everything unfolded on my screen with those trades. I meticulously handpicked trades that were not only technically solid, but also fundamentally strong. That is the secret sauce, my friends. Combining essential fundamental indicators with powerful technical tools like supply and demand to time the market with absolute precision. And let me tell you, when both fundamentals and technicals align, the probability is stacked heavily in your favor. It's all about probabilities. And always remember, everything we do here is based on probability, no room for recklessness. We never sacrifice probability, not for a second. And guess what? With higher probability comes a fantastic risk to reward proposition, because we are all about trading those price turns, never chasing price. So my friends, buckle up, get ready for another exciting week as we navigate this incredible world of prop trading challenge together. As always, thank you for joining, and I'll catch you in the next video.